Hello and welcome to the Bellingham Real Estate Podcast. I'm Paul Balzotti. I'm here with Kate Fadden. Welcome, Kate.
Thanks for having me.
Yes, and today we are talking about move up buying, and it was your idea to jump on and talk about this, which I think is a really, really great idea for 2024. It's potentially a great year for move up buying, and we're gonna talk about what move up buying is. Why we think it could be a good time for some people to do so, and some tips and some ideas about the move up buying process. So let's start out by Kate, maybe just like explain to people what move up buying means, and then I want you to share, if you will, your experiences, move up buying, helping people move up by, that kind of thing.
Yeah. So for those of you who don't know, move up buying is essentially when you are kind of like upgrading your house, whether that be location, size, maybe a combination of those things, or maybe, amenities that your current home doesn't have. It can be a lot of different things, but essentially kind of bumping your home up to the next level. I myself was a move up buyer. We wanted to move to a different location. And so we went through the process and actually made our offer contingent upon selling our house. We got our offer accepted, and then we went ahead and listed our house, and we're able to get that under contract and then move forward with the purchase and close simultaneously. So we did that, and it was a great example of a very traditional way to do move up buying. But a different example would be some clients I helped recently. They actually chose to list their house first, and even in a hot market, felt like that was a better option for them. So we listed their house first, got it under contract, and while we had it listed, we were out looking at homes, making contingent offers. But the way it worked out for them is that they got an offer on their house, and then they were able to get an offer accepted on a house that they wanted to buy. So kind of some different steps in that process, but the end result is still the same, which is that they got to move to a different location, a bigger house for their growing family, and newer house, that kind of thing. So, yeah. Well,
so there's a couple of things to unpack there that I want to bring up. So number one, you talked about the two of the ways. So there's three ways to do a move up purchase. One would be, and I think people don't always think about all three. So that was important that you brought them up. One is to basically wait until you have an offer on your home. Mm-hmm. And then buy, and then, in some cases you have to, you end up having to rent for a while because you sold your home first. Yep. The second way is to do a contingent offer, find your house first, write the offer contingent on the sale of your home. Mm-hmm. And then the third we hadn't touched on yet is there's like cross collateral and bridge loans,
right? Yep.
Where you can basically try to pull it all off, where you can write the offer non-contingent on the sale of your home, but still kind of buy first and then sell. So there's, and not everybody qualifies for those, but more people do than they probably realize would. And so, and the nice thing, and we could touch on this right now briefly, is this is a year where it's, looks like we'll have a strong spring market, but it's not such a hot frenzy market that you couldn't explore all three.
Yeah.
Whereas in some, there's been periods where, you kind of were forced into one situation or the other to be able to pull it off. But so that's kind of talking about, there's three ways to do it. I want to make sure we touch on when you did your move up purchase.
Yes.
I know that you bought on Lake Samish.
Yep, we're on Lake Samish.
And a Lake Samish expert here. You have a Lake Samish video too. Mm-hmm. And when you bought on Lake Samish, you told me that at the time, what year was that? That was like 2000.
That was 2016. So
2016. That was right when all the 502 operations were opening up.
Correct.
And the reason why that correlates to that is you told me that who might have looked at the same house.
Yes. So the house we bought had been on the market for quite some time, and we were told that Snoop Dogg. I don't think he actually toured it himself, but one of his people toured it for him in consideration for purchase, since he is a partner in a business here in Bellingham.
So. Did you have one of your people look at the house first too?
Yeah, you're looking at her.
Exactly. So Snoop Dogg checked out.
Snoop passed, so his
Snoop
loss
what?
are he
Yeah.
passed. So
He passed on it. Yeah,
his loss
his
is our
loss is
gain.
a gain.
Yeah.
Yeah, it would have been fun to have Snoop be be local like this, but I'm glad you're there instead.
Thanks.
So and then and I specifically remember that because I remember he was like endorsing or something like at that time, a 502 shop or something. So that's funny. So and then so you've helped other people with that process and with a lot of success. So let's kind of now jump into why, like 3 of the different reasons why, and or I wouldn't just say they're whys, but they're also just avenues to move up that people might not be thinking about. So starting with kind of just like the way the market is set up right now. So right now, statistically, we're just under a 3-month supply, but what's really unique about this particular market, it's not super unique, but it wasn't the case a couple years ago where there was no inventory at all
compared to the last couple of years.
Yeah, where we have under a 2-month supply under 500,000, a 2.2-month supply under our median price ranges, which is like under 600,000 in Whatcom County, under 700,000 in Bellingham, and then as soon as you get over the median price, it jumps over a 3-month supply. So kind of explain why that matters to the average, buyer average buyer seller that might have a lower priced home and wants to move up.
Yeah. So what that means is essentially if you've got a home in that lower range and you're going to try to sell it right now, there's still a pretty high demand for buyers of buyers looking in that range. So you're potentially looking at getting still like top dollar for your house. But then when it comes time to shop for your new house in that higher price range, you've got a lot more houses to choose from, potentially creating a scenario where you can get, maybe a better price, a lower price on that home. And not only that, but probably not competing with as many buyers. And so you're not really going to most likely be looking at, multiple offers, escalation clauses, that kind of a thing.
Yeah. Lennox Scott, our CEO, he calls it getting market price versus getting premium pricing.
Yep.
And what was the term you used? It was a different term, but it's the same term. It's the same concept. It's like premium pricing on those lower priced homes, especially this spring. I mean, I think that we're already seeing, some multiple offers coming back on that lower price range. So the idea of getting multiple offers on a lower priced home and then still being able to negotiate.
Yep.
That's a really unique scenario right now. Yeah. That could line up really, really well. What other reasons do you want to touch on as far as like reasons why now would be a good time to move up?
Well, I mean, I think the predictions that I've heard anyway on interest rates for the year is I think it's expected that they're going to go down a little bit, but I think really in the grand scheme of things this year, it's looking like they're probably going to be fairly stable. So for people who kind of maybe in the last year have been thinking like, oh, I really want to, I want to get that bigger house or I want to live in this other neighborhood or whatever, and they've held off thinking, I'm going to wait for rates to go down. I don't know that this year we're going to see a dramatic drop. So creating that more stable market, I think, makes it a really safe move to make because you're not, we're not dealing with the rates we were dealing with last year. So I think that that's one reason why, it makes sense to explore, going down that path this year versus waiting because we don't know how long it's going to be before rates, have a significant reduction.
Yeah. And I think that we had a great lender in for our office meeting, and they showed us a chart of the costs of waiting. Yeah. And if you are listening, we'll definitely on the video version of this, we'll try to share this chart. Yeah. And it was based on $800,000, I think. Yeah, it was based on a purchase of an $800,000 home with a sale, I think, of a $500,000 home. Yeah. So, and I think that what are the numbers on that? So on 800,000, it was basically like you have if you're buying an $800,000 home today and rates were at like 6.75, is that what it was? So I think it was at 6.75, and then the chart will show if you waited until the home was, let's say a year from now, because you're right, rates are probably not going to go down a full year this year potentially, but let's say in a year and a half, let's say we're in summer of 2025, rates are at 5.75.
Right.
And so you're thinking, oh, I'd rather wait till they're at 5.75, because we all know that the biggest issue is that, if you're sitting on a 2 or 3% interest rate,
it's hard to
get to give that up. And we were talking about that personally.
Yeah.
And, but, so a lot of people is like, oh, well, if it gets to in the 5s, then I'll consider. So, but there is a cost of waiting, right?
Yeah. I mean, think about what is that price if you're looking at appreciation of that home, that $800,000 home today, year and a half from now, if let's say it appreciates, between 4 and 5%, now that list price on that same home is going to be higher. So although the rates may be lower, you're missing out on that equity that you would have gained in that first year and would essentially have paid for itself.
Well, and more than that, because now that I'm looking over at the whiteboard and I can read my notes that are in gibberish. One of the notes that I had down was, the lender, and it should show on the, we should be able to share this. It was something like $4,000. So let's say you lock in on an $800,000 house with $4,000 in a refinance, and let's say you have to pay $4,000 in a year for the refinance.
Yep.
You could sit there and go, okay, well, if the rate's 1% lower in a year, that would be a much lower payment, and the payment amount is about $250 less per month when it's 1% lower. Mm-hmm. So that whole year, if you bought this year, that whole year, you're going to be, over the course of the year, you're going to spend approximately $3,000 more
right,
on a mortgage payment over the next year. Mm-hmm. You're also then going to have to refinance in a year for another $4,000.
$4,000.
So now you're $7,000 more out because you had to pay more this year and refinance in a year. But if the rate is down at 1% in a year, the odds of that $800,000 house being up at $840,000 is extremely high.
Right.
So if it's at $840 and it costs you $10,000, you're $30,000 ahead. Mm-hmm. And that's not a realtor lender, pitch that is like, we're sharing this chart because we absolutely, based on our experience, based on historical experience, believe that this is the real deal on the most likely scenario to go down.
Yeah, absolutely.
And so, and what was you told me another, about the NAR stat on this too.
Yeah, there's a national stat that said for every drop in interest rates of 1%, there's 5 million new buyers or eligible buyers that can come into the market. Now, that's on a national level. Of course, it's less for Whatcom County, but still, I mean, I think it's a good example of what happens when rates go down. Suddenly, not only do the current buyers that are looking for a home, it helps them because they have more buying power now, but it also creates a scenario where there's all these new buyers who can now afford to buy a house that are now in the market and competing for that same house that you're competing for.
Yeah, so essentially that move up purchase, that $800,000 purchase that right now we're explaining is a little bit of a soft market still. Mm-hmm. If rates are in the 5s, we believe that $800,000 house is going to be a strong market again and a seller's market again.
Correct.
And so so the idea that it could be $40,000 higher in a year and a half, 4% of home appreciation on a $800,000 house is not an unrealistic thought at all. So and then and I want to kind of stop here and mention something else. So the last podcast we did, one of the clips from the video, I think myself or Vanessa, who was on the podcast, said something about why right now has price points where it's potentially a good time to buy, where we could where prices have where we feel like prices have kind of softened a little bit because prices are down slightly year over year, and why we think now is a good time to buy in a lot of these price ranges. And then a comment on the post was like, oh, that's a really unique perspective, like a realtor saying that now is a good time to buy. and like, while I appreciate that when we're having these conversations that it always sounds kind of cliche or whatever, I was also reflecting on that, and I was thinking, well, everybody I know, for the last 20 years that has been in the game of like real estate, that is like believes in it and is doing it. And most realtors are also some of the heaviest investors in real estate. Like we own real estate, et cetera. And they're the ones who are like growing their wealth, that are like making it happen. And a lot of the people on the sidelines that are like, maybe the person who said that does own real estate. I'm not trying to,
Sure.
But it's kind of like the point is that when we're going through all this, it's not just like as a sales pitch. It's more like there is. I feel like, and I'm assuming you agree that what happens with a lot of people is they kind of have this, like, they create like a narrative of like kind of fear on like doing the things they want to do, and it stops them from doing, like, for example, we're talking about moving up. This is somebody's going from somebody's who already owns and helping them consider the possibilities of getting to where they want to be, what they really want to live in. And usually that home also on that move up is in a better location, is a more premium neighborhood kind of thing that's probably going to outperform in the long run the home that they're in, and they're going to be happier.
Right.
And so it's not really about, I'm getting defensive out of nowhere because I'm just thinking back on this, but I think it's important to like point out that we're trying to like give tools and concepts and thoughts to like the process that just you might not be thinking about.
Yeah, I mean, I think that it's, I totally agree with what you said. And I think it's hard sometimes to look at a home purchase as like an asset, but that's really what it is. And for most people, it is the largest asset that they have. And so if you think about like growing your wealth, it's probably the number one way the average homeowner in America can grow their wealth is to do a move-up purchase. And yes, it's scary because it affects your bottom line and, the money you're paying every month. But if you're looking at it from a larger scale, longer term picture, you're increasing your long-term wealth significantly by making that move. And so, I don't know. I don't like the saying no risk, no reward, but in this scenario, that is kind of what we're talking about. It just depends, I think, on what your comfort level is with risk taking, right? Like for some people, it may feel just more safe and comfortable to stay in the house that they're in and they want to pay it off and that's it. And I totally respect that approach as well. But for people who either need more space or, there's a true need in moving up to a different home. I think that, it's a super smart financial decision. As long as you're buying a house that fits within what's realistic for your family, your budget and that kind of thing. And that's something I think that's important to have a dialogue and something I try to really discuss with my clients, and with, their lender. And that's why it's really important to have a good team, to make sure that you're talking about all of these things and making sure that as a buyer, you're feeling educated and confident in the decision that you're making. Yeah, because
your first home that you buy, there's a lot of trade-offs. There's a lot you're sacrificing maybe not only space but location and maybe cosmetically what it looks like. And of course, cosmetics you can always upgrade over time. But I think what also makes the move-up purchase kind of holds people back is, you do have this idea in your head of like what you always wanted to live in or whatever.
Sure.
And that move up tends to be where the rubber meets the road. It's like, am I going to get, what I've always wanted or whatever? And then you still have to battle with, there's trade-offs there too, like there's
Absolutely.
there's never, there's like we say that like even when you build, which you basically just did a gut renovation on your lake home. You could still like a month later be like, I wish I would have done this, or I wish there's certain things you'd want to have that like you had constraints on what you could do. And so it's, it's very rare that you truly get like everything you ever wanted, but you're wanting far less trade-offs. And so it's something that we don't take lightly in that process. But if you at least feel empowered that it's at least the timing could be good and your eyes are open to the possibilities. I think like with real estate, it's like one of those things where if you give yourself 2-3 months to do something, then it may or may not work out. But if you're like, okay, if the right home comes up, I'm ready to go, all those kind of things. I've talked to a realtor. My house is like, I got my house 90% fixed up. It's not 100%, but it's 90%. I could get it ready in a weekend, you know, and now I'm like, I'm going to spend this year really trying to focus on, can I find the right home? You know, that's kind of all we're talking about. The last thing I want to mention before we jump off, because you talked about big financial decision risks.
Yeah.
You know, there's also the debt consolidation thing, which is not in the picture for everybody, but is an interesting thought too, right?
Right. Yeah. And again, we'll put the slides up in the video version of this, but which I would encourage people to look at, because I think when you look at this, look at the images, the graphs, and the information, it's really quite interesting. But anyway, I mean, debt consolidation, that was something that the lender brought up as an option, and it hadn't really occurred to me either. But, you know, some people may have like, you know, car loan, credit card, what have you, that you've got those minimum monthly payments that you've got to make. And the example that they gave is to, you know, you're doing a move up purchase. So you're buying, you know, a home that's more than the home you own. You're selling your current home, but at that same time, you're also paying off those additional debts and wrapping those into the new loan with the home purchase. And the example they gave, it actually was allowing that person to save a significant amount of money on a monthly basis, because oftentimes those rates are quite a bit higher. I mean, that's obviously not going to be the case for everybody, but I think it's a great example and something that is important to talk about with your lender if you have some of those additional debts that it might be helpful to get those paid off at the same time. So and also if you wrap your debt, essentially if you sell your home, and then with your new home you wrap all of those, you know, loans and credit cards into essentially your new mortgage. The mortgage interest is tax deductible in most cases, not for everybody at every income level, but in most cases it's tax deductible and the other interest is not. Correct.
So that's another point in there. So so that is, I think, all the stuff we wanted to share today. So thank you for listening or watching. Thank you for joining Kate. And if you are looking to move up, I hope you reach out to Kate. And she's a fabulous top producing realtor, and we're grateful you're with us, grateful you joined us today. And thank you for watching and listening, guys.
Thanks.